You're running full speed, but the markets are faster. Quasar Markets Live brings the world's top financial minds to you. Everything you need to know in one place. Learn from elite educators and gain a competitive edge, leveling the playing field for you. Join the conversation. Quasar Markets Live.
Good morning, Quasar Markets Live. So happy to be joined by our regular commentator here and guest, Anne-Marie Bain. How are you doing today?
I am doing really well. Excited to spend time with you. Want to talk to you actually a little bit about what you see going on in Bitcoin right now too. So
Yeah, absolutely.
we got a lot to chat about, especially with NVIDIA coming down the pike.
Right.
It's been the juggernaut for so long. We'll see what it does to the markets.
Yeah, it's interesting. We've had some retail earnings come across today. They've been surprisingly good so far. I think, changing sort of the tune there. But as you were talking to me before we came on, we've got, a few different things at play right now. NVIDIA, it seems like the whole market today, in my opinion, is waiting on NVIDIA, the elephant in the room.
Yeah, no doubt about it. No doubt about it. But you bring up a very interesting point that leads me to ask, the question, what actually gives? So we see retail, and they came out pretty good. The article that I read, and I wish I had the reference, it said more retail inflows into ETFs have been registered in the last month.
Yeah.
So retail is really pushing the limits on chasing this move up. And so unfortunately, they've been called the dumb money. I'm retail, so we've been called the dumb money for a long time. The question is this, though: if we compare what's happened in the last, 6-8 months or so, retail has really come in heavy on the dips, and the commodity technical advisors have been caught flat-footed on a lot of these reflexive moves. And so, because retail now has things like us at Quasar Markets and so many different spaces on social media that they can connect, it's a converging of a hive mind that is really putting pressure on big money. And so, the question now is, are they piling in a little bit too much too late in this upward cycle, or do they really have something going there? So that's something that we really have never spoken about as columnists per se, in terms of how much power retail is affecting the market.
And we are seeing that, right? We're seeing, whether it be zero DTEs, the way that they're trading that now, or like you said, and that's where I think we're seeing a lot of these piles into ETFs, right?
Yes.
Is really happening there. And I think I would ask also, has it gone to the psyche of the trader where, I'm not getting as many people asking me what stocks I'm buying right now. They're saying, are you going long in the market? Are you waiting for a dip? They're more asking broader market questions as opposed to specific. What I usually get is, what's going on with stock XYZ?
Yeah. And that question in itself, it sort of suggests that the retail trader, because of the exposure that they can get and the information they can get that used to be just big money investors can get, they're becoming more savvy about motion and understanding broad motion, which is why that question there says, hey, maybe they're not so dumb. Maybe
right. No, I think
on.
They're getting more and more sophisticated by the day. I think that they're using more and more tools at their disposal, as yourself, a futures trader, and people that help train people at trade futures. I see more and more people in that world than ever were before, taking advantage of the fact that there isn't the, daily limits that are in place in the stock market.
Exactly.
Leveling that playing field like we've talked about. And I just think that, and I think that the other part is, what we heard from the pros is this is a different market. This is a different time. And maybe it really wasn't, maybe it did follow and retail outsmarted, the institutions to a bit, or is Warren the right guy and it's just holding on to money with their life right now for that ultimate capitulation to come in. And then I'd ask you, recently my view, BigBeat's view had been, we'd seen that capitulation and there was the path of least resistance was the rallies, these bear market rallies. Now, as you and I were talking before we came on, I have changed sort of my thesis right now to where we're equally weighted that we could either see retail take us to that next level, and if institutional money follows, then watch out above, or do we go back to the downside, which would, I think, cause a second capitulation from retail because people are nervous still out there.
Yeah, for sure. And the things that we end up seeing, what about consumer sentiment? All of a sudden, it took that updraft in the last reading. This is, it could be that this market is very different in the sense that institutional flow isn't completely running the show, except in the bond market, right?
Yeah.
There's still retail traders. They don't trade in the bond market per se. And so they still have the heavy hand there, but maybe it is just a bit different this time because.
And has that changed a little? Because I think that ETF flow that I saw inflows, TLT had a decent amount in it.
Yes. And that is how they're entering that space. But I suspect that a lot of traders maybe stay away from that and go because it's a little bit esoteric. The mind still doesn't largely compute, hey, if bonds go down, yields go up. And if yields go up, markets go down. And so that sort of mishmash there, I think it still keeps broader traders out of the market. But as you said, as the retail trader becomes more sophisticated, they're stepping into those pools that, institutional traders once considered just theirs exclusively.
Yeah. And I think, though, some of the worry there is still we've seen those days that don't necessarily make sense, right? Where everything is moving up, including rates on the same day, or everything is moving down, including rates on the same day, and the Dixie, and commodities, gold and Bitcoin and the others. And you're saying, well, what's going on?
And when we see that, we know automatically that there is a cross current of thought, a divergence of one group of traders on this side, one group of traders on this side, and they're really putting their bets to work in the market. And you're seeing everything move at the same time in general dislocation. One of the bigger dislocations also is what's going on with gold, right? Normally, I can't even tell you how many commodity traders I talked to that said, gold's in a topping formation. And a ton of them went short. And they are quite flummoxed right now as it still continues.
Yeah, I mean, we've heard those calls right at 3,000. We started to hear the top is in, it's going to retrace, sort of like we've seen with Bitcoin at that 112. We haven't seen that big pullback either, which is interesting there. I've also noticed something in the mornings. It seems like the retail is not getting spoofed by algos in the morning. We used to see, that algos push something down and catch the bears, or push something up right on the cash open and catch the bulls. But we haven't really seen that. They've been letting it flow out, and I've been watching, and that first 20 minutes has almost been algo versus algo, it seems like. and then retail seems to move, and you're
That
seeing
is
those flows in
very
volume.
interesting. That is a very interesting observation. I have not noticed that, but I am going to keep my eyes on it for sure. That is very interesting. Now that again would show even more sophistication in the broad mindset of the retail trader. It's kind of exciting,
Right.
that the retail trader has learned to harness the power of social networks, and we see that right in Reddit and across FinTwit and all those spaces, and they just end up building a groundswell for themselves. So I would love to see more of that, and have more retail traders hold on. I think the problem, because we do work with education a lot, the problem is that the retail trader doesn't allow an entire move to percolate and go where it does.
Right.
They're quick in, quick out. And the more times you interact with the market, especially if you change directions, there's
Absolutely.
more opportunity to go upside down. So if we can get the retail trader to harness a little bit more discipline in terms of saying, listen, I understand what's happening. I believe that I'm going to just hang on for this rotation intraday or from a short-term swing. Like when we first started talking, I said, hey, listen, the bonds are fading, and I think that that's going to drag on the market a little. And so if someone says, hey, I'm going to take a short, the goal is to let the price action move into a support zone that other traders have said, hey, listen, this is actually support, rather than
Right.
trying to reverse in some form or fashion.
Yeah, being patient for your entries, I do think, is extremely important right now, and that's one thing to be careful with. Do you worry? I worry a little bit that not enough traders are also investing. That they're not looking at the longer term
Yeah.
the way that they probably should be. Also,
Yeah.
again, when those of us that trade have different accounts, I keep them in different places so that I'm not looking at long term trades when I'm
Yeah.
scalping and things like that. Are we seeing that sophistication pick up yet? Because I haven't on my side so far.
So, what you bring up is something that's fairly troubling to me, because we want the retail trader to scrape off every month and say, all right, this is going to this account. It's going to be a little bit more secure, a little less volatile, a little whatever. But we are not a nation of savers. And so, on top of that, being younger, and most of the active traders are younger, they're between 20 and 45 in general. And so they usually have less means. And so their thought is, I'm just throwing everything I've got and I'm swinging for the fences. And that is a very dangerous place to be, right?
Yeah.
It's a very, very dangerous place to be. As they say in special forces, slow is fast, but the one in between, it's slow is smooth and smooth
Right.
is fast. And so what we have a tendency to see in retail traders is there's no smooth event. It's a lot of boom and bust, a lot of jagged motion. And, if you're just thinking about swinging for the fences all the time, one of the biggest things you're going to end up looking at is a portfolio balance that continues to do this. And at the end, the only thing you've done is make your broker some money.
Right.
Right. And
And we don't
so,
want to do that. We don't
yeah,
want to do that.
yeah, they make enough.
Yeah, absolutely. My other question would be, with this sophistication coming on, are you finding in the market we're hitting right now, is it helping or hurting your ability to sell options? Because I know that you're a big seller of options, right?
Yes. I don't see that the option chains continue to be very healthy. You and I both have talked about it before. We know it's the tail wagging the dog.
Yeah.
It is what it is. And so what we have to say is, how can we position with implied volatility? And that leads us into the really big juggernaut in the room. It's, how might NVIDIA behave today?
Yeah, absolutely. What are your thoughts as we get into NVIDIA here? BigBeat's firmly in the long position. He's been long since like 115, so he's been in it. And again, has held his conviction, and he's calling for 150 here tonight.
So very interesting. NVIDIA has got an implied volatility move for tonight's earnings event. Only $9.80, right? And so it's $9.80 from that opening range. So we can look, let's round it up to 10. They are really, the vol chains are saying there's only going to be a $10 move. And so I find this to be pretty interesting.
Yeah.
Right? Pretty interesting. Now, twofold, only 2 days to expiry. So they could be saying, hey, listen, it might wiggle around here, but at the end of the day, what we're really looking for is a continuation of the move. But I suspect the option sellers are going to win again today. And so if we're looking at 145 on the upside and 125 on the downside, there are a lot of super interesting trades that we can put together there. And some of them are a little esoteric, so I don't want to scare off anybody that's a little newer, right? But you can do things like a back ratio, which is, let's say you think it's not going to move above 145, but if it catches flight, maybe it ends up well above 150. And so if you sell the 145, but then you buy two 150s and a price action really moves, you've actually paid for a long position that could be very, very nice. Now, if it doesn't move in that space, you lose a little, but it wouldn't be the kind of loss you might expect with, just buying the long calls.
I was going to say a naked call. Yeah. I mean,
exactly.
And I think that you just hit on something that I would love for our viewers to understand a little bit more. Maybe you can break down, is that a lot of times we're using much more sophisticated trading than just naked long and short. And
Absolutely.
the retail really isn't doing that yet.
No,
like I would have said, just off the top of my head, an iron condor or, something like that. If that's, within that $10 range, looking at that, or, how, like you just said, would be the way that you play it, right? You wouldn't just go naked.
No, I never go naked. I'll go naked a put if I intend to acquire the stock.
To start a position down the road. Same thing.
Yeah.
I'll sell.
I don't like buying calls. I'm a serial short seller, right? In terms of the option chains.
Right.
I'm always selling them short. I will sell volatility before I will buy it. Now, I will have to tell you, in 2021, that was not the thing to do, because every day we got a bid, right? Yeah. And the pullbacks, they were, I still have PTSD.
Right. Well, and that's important just to point out, is not everything works in every market, not every technique. We have to evolve as traders, play the hand in front of us. I did see a great comment by one of our viewers here. Retail traders coordinating more of their movements using social media and Reddit have profound impact for the market, both their pace portfolios managed by others and their speculative. Absolutely.
I love David Ferret.
Yeah.
You're awesome, Dave. Good to see you there.
Yeah, and that is exactly what we're talking about. Yeah. We are seeing it, and like you said, social media becomes such a part of it. We see it on Twitter for us, you know, the amount of views that we get here on Quasar, and just the amount of interaction that happens, you know, with our Twitter feed. Traders are trying to learn, you know, and that's why they need to go to the tradingbook.com. I will share that up here on my screen so they can get the information. Can you tell them a little bit about what you do, Anne Marie?
So, you know, I love to help folks understand what market flow is doing. What does a market structure look like? How do the participants feel about things? Because the market is emotionally driven. There's no doubt about it. We love to put technical overlays, and it works fine as long as our technical overlays are working. But as soon as they stop working, our brain falls in the trash can and it's all about how I feel.
Right.
Am I scared? Am I greedy? Am I afraid of missing out? Am I whatever it is? And so the goal, especially coming on to Quasar Markets, is to really help those retail traders entrench themselves in the way that bigger money has been moving the markets over time. So they learn, wait, how do I manage risk? And if I just say, hey, I'm just going to risk, 5 points on this, well, the market doesn't care if 5 points is your stop, right? The market might be telling you, listen, there's 10 points of motion here. So either you size down, you wait for a better fill, or you sit on your hands and learn to let price come to you in certain environments. And when we're trending straight up, it's great to chase price. When we're trending straight down, it's great to chase price. But guess what? That doesn't happen. 75% of the time, we're caught in big landlocked ranges, right? Some people will argue that at 70, it's between those edges. And so you just have to say, what's going to benefit me as a trader?
Right.
And so when we listen to folks like Quasar and we get to hear from guests, the retail trader really needs to take away, all right, here's some information I saw. Here's some information I think I know. Can I blend those together and make it something that's useful to me? Or is it so dissonant I have to throw it out? And a lot of times, the newer traders are still, just tell me where to buy and sell. The more experienced retail trader says, wait a second, what's going on here? And so instead of playing a game of checkers, they really have started playing the game of chess. So hat tip to
absolutely, like you said, and that's what's important. It's not what we say about a particular stock like Nvidia today. It's about how you approach it, how you look at that implied volatility that you showed and that you talked about in the option chain, and where you can see that there's expected about a $10 move. And now that you've done that research, how you want to play it based on that $10 move is up to individual traders. Are you bullish? Are you bearish? Are you directionally not biased and you want to be neutral, trying to, as Anne Marie was saying, earn on maybe not a move happening? That's up to the individual trader. So Anne Marie, thank you. I don't want to monopolize your time. I know you have to go today.
Appreciate it.
Thank you so much for joining us, like always. And you have a fantastic trading day.
You too, Howard. Thanks so much. Thanks to everyone for joining. And it's always fun to spend time with you. I can't wait for the next time where we can mishmash all kinds of things.
Awesome. We appreciate it so much. Thank you.